Okay, let's move on. Let's talk about what's happening with KEI Industries. Given that the stock has hit a record high and it's tripled in the last 1 year, let's take stock of what the company fundamentals are looking at and whether they can push the stock price further or not. Joining us right now is Anil Gupta, the CMD at KEI Industries, joining in on the show right now. Anil, hi, good morning. Good to have you on the show. Just wanted to understand to begin with what's happening with railway electrification and how's your order book looking right now?
Railway electrification is at a good pace at the moment, but apart from railway electrification, there is a huge number of metro projects which are running and where the substantial capex is taking place. I think that both these sectors are looking extremely good. On the railway lines, we are also finding a lot of tunnel ventilation projects in the hilly areas, which is also a good consumer for cables. We see a good demand from the infrastructure projects as well as the real estate in the coming months.
Okay. Would you be able to spell it out and give me a breakup of which segment contributes to how much of the current order book?
It's difficult to give exact segmentation, but as I said, that infrastructure segment is almost driving 40 to 45% of the order book, and plus the construction sector, which includes real estate and the large buildings like hospitals, government buildings, or other any type of construction. The shifting of overhead lines to underground cables in the highway projects, road highway projects, as well as I mentioned, the solar and wind power, solar projects mainly are also driving a good amount of growth. So the total power segment, if I say, which includes transmission and distribution and solar generation, is almost having 30% or 30 to 33% of the market share in the cables, and around 40 to 45% is coming from the infra projects, and another 25% is from construction and real estate projects. So far as house wires are concerned, retail is looking good, and there is a good amount of activity in the house constructions and building constructions. I think real estate sector will continue to do well because almost stuck inventories are getting over, and developers are building now new buildings, and also the consumers are coming up because of the low rate of interest on the home loans and also the spendable money. There looks to be a good demand for the housing.
Do you have plans to move into EVs? Would you be looking at diversifying your cable and wire business where you can supply to the possible EV business which is now getting created?
We are already supplying electrical, cables which are used for charging of the electrical vehicles. And so far as inside wiring is concerned, we'll definitely move into that how to get into the wire harnesses for the EV electrical vehicles.
Will this be an extension of your product line, or you'll have to do supplementary capex to enter into this business?
It will be a small supplementary capex, because basic wire production and cable production we have. It is only the assembly lines which we'll have to create.
Right. Also wanted to understand what really is happening when it comes to demand coming back in retail wires as well as EHVs with the opening of project sites now. If you could just give us some more info on the same.
Extra high voltage cable is basically underground transmission. And in the large cities or even in the big projects, be it steel or cement, wherever right of the way is not available, mostly the transmission bulk power is transmitted through underground cables. And especially in the larger cities like Delhi, Bombay, Chennai, Hyderabad, Bangalore, or Lucknow, or any such large cities, it is completely now the transmission is through underground cables, which is extra high voltage cables, right from 66 kV to 220 kV. And in some cities now, even the cable demand is coming up at 400 kV voltage level also, which we are doing. So far as house wires are concerned, I mentioned that there's a revival in demand for last 6 months in the developer segment, which consists of large buildings and also the individual houses, which private bungalows or private kothis, which people construct for themselves in the smaller cities, B, C, and D towns, as well as rural areas. And the same speed some we have seen in the larger cities as well. Even you can see that, check it from the record registrations of the properties happening in the larger cities for last few months.
Sure. Mr. Gupta, your stock has already hit a record high and it's tripled in the last 1 year. What I wanted to understand is that you are expecting FY22 revenue growth of 17 to 18%. You're looking at sustainable margin levels of 11%. What's the possibility, given the strong order momentum, that you will actually succeed or rather, even exceed these projections?
We will definitely exceed these projections. As it looks, we expect to achieve around 20 to 22% growth in this year. I'm a bit conservative, and let's try for the best.
Okay. Good to have you on the show, Mr. Gupta, and good luck from all of us here.